Hello there, this is James and you're watching Tixee Live. And a very happy Friday, and I hope you like our new intro, our countdown. I think it's absolutely awesome. Anyway, happy NFP day, everybody. And that's what I really want to have a little chat about today, is a little bit about the job data happening later today and how I think that could be key to a potential massive story. And I also want to talk about a couple of other little things, a little update on commodities, and the earnings season is on the horizon. But before I get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, like I mentioned, it is happy NFP day, non-farm payroll. As I've always, those who've watched me a few times, I've often said this used to be a huge event. But over the last couple of years or so, it's sort of lost its impact, so to speak. But I do think it's a story waiting to happen, and I'll tell you the reasons why in a bit. Before I get into that, though, let's have a quick chat about a couple of other things. Maybe have a quick look at commodities, how they're doing at the moment. Now, oil has edged slightly higher on supply concerns. The market has seemed to have forgotten a little bit about the recession fears, which was driving oil lower, and now focus a bit more on supply again. And oil currently is trading around just above $100.62. However, it is still set for its second weekly loss. And in fact, the big sell-off on Tuesday, saw WTI fall by 8% and Brent crash by 9%. In fact, Brent's crash was the third biggest crash since 1998. 1998. So even though oil has edged a little bit higher recently, the general consensus is the top side is limited due to recession fears. So the recession is likely to restrain it from going to the highs it saw in March and in May, etc. But let's have a quick look at it and see where we are with it as it stands. So oil, like I say, is currently trading around $100.63, caught between the two Bollinger Bands, off the bottom Bollinger Band, above the 100-day moving average, but below the 200-day moving average. And of course, the RSI is in between the 30 and the 70, so it's not indicating overbought, oversold. But like I said, it is generally felt by investors that recession fears, though it did rise quite dramatically yesterday, as we can see from this candle here, basically on supply concerns again. The general consensus is that the fears of recession will keep it capped, which is good news for us, because obviously we want oil prices to come down so we can afford to fill our cars. Brent is around $103.42 a barrel. Again, like say yesterday, it did rise again on supply concerns, but again, it seems capped around this level. Like I say, it's trading $103.40. So yeah, that's the story with oil at the moment. Keeping with commodities, let's have a look at one of my favorites, which of course is the yellow metal. It is heading for its fourth weekly decline. As I discussed yesterday, this is mainly down to dollar strength and the increase in interest rates, which makes holding gold more expensive. So this is why the yellow metal is struggling. In fact, it's actually nearing a 9-month low. So we'll have a quick look at gold as well, see where we are. Like I said, I'm keeping an eye on a particular level, which I share with you now. So this is where gold is at the moment, currently trading at $1,741.47. If we look at it on a daily, this is the level I'm keeping an eye on. Obviously, it's bouncing off that initial area of interest, which I've put the Fenerbahce in. But the level I'm more interested in is $1,727. That's the area of interest I'm keeping an eye on. Reason being, because that's been the area where we have seen some buying in the past. So I'm keeping a very close eye on that level. But yeah, gold again is set to decline for the 4th week as well. So yeah, not a good time for commodities in general at the moment. So yeah, I want to talk about something else, which is on the horizon, which I think again is going to be become a major focus as of next week, and that is earnings season. Earnings season is about to start. Now, earnings season, for those who are not in the know, is when huge companies reveal their quarterly profits or earnings, so to speak. Companies like Apple, Microsoft, Google, you name them. And these reports are released between July the 15th to August the 31st. So yeah, it's about to start next week. But the problem is, what the market is thinking about this is that many investors are fearing the worst. Okay, but they're expecting that these earnings to show quite a bit of negative results. Yes, we did have some good news yesterday from Samsung, but the earnings season for the States, a lot of people are fearing the worst, which this could really scare the market. In fact, if we look back on what we have done so far in Q1 and Q2, the world stocks in general have shed more than 20 trillion since hitting the highs in January. So you can sort of understand why the earnings season, which starts next week, is giving the market a little bit of jitters, so to speak, and are beginning to scare quite a few investors, thinking that if we're going to have the same as we have just done previously, the market might even struggle even more. So yeah, this is something which is going to become a big story, I think, as of next week. So it's something we all need to watch very, very, very closely. But that's next week. Today, I want to talk about something else, which I think is going to take the limelight, and that is job day. A job day. And I really think this is a story waiting to happen. Okay, and of course, as we know, it's NFP day. Non-farm payroll for the United States. Now, the expectation for the NFP is 268,000 new jobs created. At the same time as the NFP, of course, we have average earnings, which is expected at 5.2%. That's year on year. U.S. unemployment expected at 3.6%. And like I said, NFP expected at 268,000. The reason why I think this is a story waiting to happen is, as I mentioned yesterday, I can see a slight pattern. Okay, a slight pattern. And that is, I can see a slow decline in new jobs being created. At the same time, I can see an increase in initial jobless claims, which is where people sign on for unemployment benefit for the first time. So I'm seeing this now. Sorry, excuse me. Now here's the thing. The Fed have been very aggressive with their attack against inflation and raising interest rates. This is why the market has got the jitters and it's got scared, because they don't think the market can handle high interest rates so quickly, and it will drag us into a recession. Now, the Fed has always said that the reason why they're confident about being aggressive with interest rates is that they have a very strong labor market. The labor market. Now, like I said, I can see a decline in the labor market. And I think that if we do get a lower than expected number, then the Fed might start getting cold feet. Everybody sort of expects the Fed to raise interest rates this month by 75 basis points. If we start getting a real sign that the labor market, and their excuse has always been the labor market's strong, we can handle it, we've got a strong labor market, we're okay. If we start seeing a slowdown in the job market, then they might start changing their minds. And let me just quickly read you this out, okay? Because this, I think, is where I'm seeing a pattern, okay? May, so the expectation is 268,000 this month, okay? In May, the job NFP was 390,000. In April, 436,000. March, 398,000. February, 714,000. January, 504,000. December, 588,000. November, 647,000. October, 677,000. Now, can't you see there is obviously a slow decline in new jobs being created, which means there's less jobs being made and there's less companies hiring. And why they're not hiring is because of the lack of expansion. So I do see this thing being potentially a big event today and something worth keeping an eye on. And that's why, of course, I'm doing a watch along this afternoon for this event. I'll be going on air at 12:20 p.m. UTC, doing a live coverage of this event where we'll talk about it a little bit more in detail before it actually happens. And then, of course, we'll look quickly at the aftermath. So please come along and join me. I do think this is a potential story waiting to happen. I really do. I don't know whether or not we'll have a massive market reaction today on it, but I am expecting this to be a bigger story because, like I said, the Fed have always maintained their stance on raising interest rates quite aggressively on the back that they think we have a strong labor market. So I think we need to have a close eye on this. I do think this is a story waiting to happen. Other events, apart from obviously the NFP, Christine Lagarde, the president of the ECB, is speaking today. Those who know me know I think she's quite dovish. So we all know about the story about the euro and how much pressure the euro is under. I'll tell you where it's currently trading at the moment. It's currently still under pressure. It's trading now at 1.01052. So I doubt she'll be able to do anything to boost it. I think the general consensus with the gas crisis, which we talked about a couple of weeks ago, is that, the euro will go to parity at some point against the US dollar. So it's currently trading 1.0105. How is the other markets doing? How's the European market open so far? Well, the FTSE is currently trading 0.01%, nothing to shout about. DAX currently trading at 0.04%, and Eurostoxx 50 currently trading at negative 0.13%. But again, it's going to be a slow opener because I think from now on, unless we get any shocking developments, I think the market will really wait for the event happening later. So don't forget, please come and join me. Tixee Live, watch along, NFP today at 12:20 p.m. And like I said, I think this job data today could be a beginning of a bigger story. So be worth coming along and joining me. Don't forget, you can ask me questions anytime you wish. Don't know if there's any questions. If not, you can just say hello, maybe. Say hi. Because we are live, and the point of being live is so that we can have a chat with each other if you want to. Okay, if there is no questions, not to worry. Don't forget, if you think of a question later, jot it in the comments on either Facebook or YouTube, depending what platform you're watching me on. I will see them and I will reply and answer it next time I'm on live. So please feel free to do that. So anyway, don't forget, I'm back on at 12:20 p.m. UTC. And then after that, I'll be back on again this afternoon to do my afternoon US Open session. So that probably will be about 1:20 p.m. UTC. So I'll be back on then about an hour later. So please come and join me for either one of those or both of them if you're free and if you're able to. And anyway, like I always say, if you're watching me on Facebook and you've joined this little episode, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little episode, by all means, subscribe if you like. Click the notification button so you know next time I'm going live. If you found this little video or this episode insightful, interesting, and you've put up with my over-the-top enthusiasm on the markets, then give me one of these. I see I've got one like already, which is very nice. I like to know if you're liking it. It keeps me doing what I want to do, which I'll keep doing anyway because I love the markets and I love sharing it with you good people anyway. But anyway, till next time, remember these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.